What is up, everyone? In today's video, I'm going to cover the 4 key rules that have allowed me to become extremely profitable leverage trading Bitcoin over the past 4 years, turning hundreds of dollars into tens of thousands of dollars, consistently ending each week with a 70 to 80% win rate and achieving equity curves such as this. This is probably the most important video you're going to watch today, so I'll keep it short and sweet for you guys. So lock in and let's get after it. Let's go. So rule number 1 is your risk management or your risk control. So for every trader it's different, but for me I've developed a system where I'll only lose maximum of a 10% loss on any trade, no matter how confident I am. Now for every trader it's different, but for me this has allowed me to compound my wealth over time and grow small accounts from hundreds of dollars into tens of thousands of dollars. So let's talk a bit about risk management. So the maximum leverage I'll ever use on any Bitcoin scalp is a 20x to 30x leverage. Now, other traders have developed systems where they can use higher leverage and it works for them. But for me, more leverage just equals more risk. Here we've opened up the live chart here from Bitcoin and we're on the 5-minute time frame, and I'm going to show you my thought process behind each trade and how I apply every single rule to a trade. Now you guys probably know by now I mostly trade Bitcoin, but I do dabble in altcoins sometimes, and the maximum leverage I'd ever use on any altcoin scalp is a 10x leverage. Again, more leverage equals more risk. So this morning I woke up and Bitcoin was in this obvious bull flag consolidation. I marked out my support and my resistance. So when I woke up here, Bitcoin was about to break out here, and we did see a little bit of breakout and consolidation here. So you could have entered long here. Would have been a nice long opportunity, but inevitably it would have came back and hit your stop loss before the move came. And that is solely because we had New York open. If you look at the timestamp here at the bottom, it was 2:30 p.m. when we got that huge wick down here from Bitcoin, the huge rejection, and that is because the New York market did open. Now that brings me on to rule number 2. So rule number 2, and this necessarily isn't anything technical, solely something that has wiped away more games than me and brought more trades that were deeply in profit back to a stop loss within an hour, and that is New York Open. Now, by far, New York Open is the most volatile part of the day, and it's ruined more lives, liquidated more people, and brought more trades back to my stop loss or back to break even than you can imagine. So let me show you a prime example today of the extreme volatility that New York Open brings. So we can see this big black candle here, and no, that's not racist. Some of you would be red, but my candles are just black and white because I'm all about equality. So we can see just to the right of my ugly face down here, 2:30 p.m. for any Europeans, that is when the New York market opens. They often like to tempt you with nice setups like this, so it's very tempting to take this long setup, and it is a high probability long setup. But because of rule number 2, never open a trade or have trades open around New York Open, I did not take this setup because we seen the breakout only occurred exactly 1 hour before New York Open. So if you did take this long setup here today, whatever leverage you were using, you likely did get wicked out. Even with me using relatively small leverage compared to most traders, a lot of traders like to trade with 50x or sometimes 100x. We would have got away with it there on a 20x leverage. We were only being down 5%. But again, New York Open, along with being the most volatile part of the day, is the most emotional part of the day. So a lot of people like to take setups before the market opens. And then if you're watching your trade, which I wouldn't advise to keep watching every minute of your trade, just leave your trade right. You would have likely got scared and closed this because of the size of the dump. You would have thought this would have been a fake out here from Bitcoin and we were going to come back down into our range and possibly lower. So rule number 3 is never ever chase a trade or chase an entry. If you miss your ideal entry or your target entry, you don't chase the market, because 90% to 100% of the time it's going to come straight back on you and hit your stop loss. The most common problem is people think they're going to make it all in one trade or going to get rich off one trade. If you miss the move, there'll be more opportunities. There are multiple opportunities every day in the market. It's just all about getting the perfect entry. And that brings me to discipline. And that's another key aspect of number 3. It allows you to build discipline. And we all know technical analysis is 20% of trading, and controlling your emotions and discipline is the other 80%. So again, if you miss your entry, you wait for the next. And that is a key part in becoming profitable. So a quick example and a perfect example would have been today's price action here on Bitcoin. If you did chase this move here on this breakout and you missed the perfect retest here, and per se you entered here, you got confident that the breakout was strong and we did see some strength, and you entered here, you would have set your stop loss just under the low here or back under our resistance, because that would be obvious invalidation that this trade was a fake out and we were going back lower. But again, New York Open is always super volatile in both directions. You never know what's going to happen. So that's always my advice, to stay clear of New York Open 2 hours before and 2 hours after if you want to get the safest entries. So if you did chase this move here and you entered here and you got greedy and you set your stop loss back under the resistance as an invalidation for your trade, you would have seen here Bitcoin came back under this resistance and you would have hit your stop loss. So that's a perfect example today on how if you get greedy chasing the move, 90% of the time it will come back and hit your stop loss. And finally, number 4, we covered a small bit at the start of the video, but it's your position sizing and leverage. Never be oversized or over leveraged on any trade, no matter how confident you are in the trade, because this will lead you to making silly mistakes, chasing gains and blowing accounts. We've all done it before. We've went on a streak, we've won 4 or 5 trades, we've ran a few $100s up to a few thousand, and then we get greedy. We start to oversize, start to turn up the leverage right before we enter the trade, and it always comes back to bite you. It is a new day, hence the t-shirt change, but I'm going to run through position sizing and leverage for you guys. So especially for you new traders out there, this is going to be extremely important these next few minutes. So lock in and let's go. So for this example, let's say you have an account with $1,000. Now, don't mind my dodgy writing here now. So you have an account with $1,000. The simplest way to explain leverage is your buying power. So exchanges now offer all the way up to 500x leverage, which is absolutely insane. You should never be allowed to trade with anything above 100 leverage. You shouldn't even know what 100x leverage is in trading. For me, more leverage equals more risk, and it's just a trick used by the exchanges. So if you are anywhere near 100x or using 100x, you're more of a gambler than a trader. And maybe you enjoy watching your account grow by hundreds or lose hundreds in seconds, but that is gambling and that will not last long term while you're trading. So for this example, we have an account with $1,000. So if you have an account with $1,000 and you're using a 20x leverage, so you're basically multiplying your $1,000 by 20. So your buying power is now $20,000. And again, sorry for this bad writing here. So $20,000. Okay. So that's essentially leverage. Whatever leverage you're using, it just increases your buying power. So for this example, we're using 20x. So your $1,000 is now essentially worth $20,000. But also, on the other hand, if you're using a 20x leverage for this example per se, if Bitcoin moves down minus 1% on your $1,000, if you were just trading without leverage, you would lose $10. But because we are using 20x leverage in this example, that $10 is now multiplied by 20. So that's a $200 loss you've taken. Now after losing 1%. So it's exact same here. The fact that your $1,000 is now worth $20,000 and you've lost 1%, what's minus 1% of 20,000? $200. So now, instead of losing $10, you've now lost 200. And that's the beauty of leverage, but also the pain of leverage. You can make $200 after losing 1%, or you can as easily lose $200. So I hope that makes sense. So leverage essentially multiplies your buying power, but also multiplies your risk. So if you lose 1% with a 20x leverage, you're losing 20%. Okay, so that is leverage for you guys. Now let's move on to position sizing. So let's work with an $1,000 account again to make stuff a bit easier. So $1,000 is your account value. Okay. Now the maximum I'll ever put on a trade is 10%. So the maximum I'm willing to risk on an account, any account of any size, is 10%. So for this case, $1,000 with a 10% risk, that is $100. Okay. And as I mentioned earlier in the video, the maximum I'm willing to lose on any trade is 10%. So what is 10% of $100? 10 singular dollars. So for this example with $1,000, the maximum size I'll ever put on any trade is 10% of my account. And the maximum loss I'll ever take is 10%. So you can imagine every trade I take, if my account were to be $1,000, I'll be risking $100. My risk will be $100 and the maximum loss will be $10. Now this is super important, not only for small accounts or whatever value your account is, it builds discipline. So $10 might not seem like much, or $100 might not seem like much to some people, depending on what part of the world you're in. But developing a system like this and staying disciplined to rules like these is what helps you when you grow small accounts into larger accounts, because technical analysis is only 20% of trading, and the other 80% is controlling your emotions. And we've all been there, where we're about to take a trade and we get greedy. Right before we take the trade, we up the leverage maybe from a 20x to 30x, which is also, as I said, multiplying your risk, adding risk to your trade. Or we might oversize our trade and put $200 in the trade. So we might lose 2% of our account or 20% of the trade. Now, I hope that makes sense for you guys. And we're going to have a quick look at our short position we took here on Bitcoin today. So I did alert anyone that follows me on X or Telegram to take this short with me. Bitcoin did dump minus 1.3% since our entry. I did alert the guys to move their stop loss to break even. The reason I entered this trade is because we have a higher time frame trend line here, the key trend line, and once we had an hourly close below, it was confirmation to enter short. I took this short, alerted the guys, and we are printing. Let's have a quick check here. So you can see we are up 13% on this trade, and we are up nearly $900 on this short. So whatever happens here now, even if it comes back to break even, I will not lose a single penny on this trade. I hope now it comes down to our TP. So how do we mark our TPs? Firstly, our first TP would be here at the low at 70,500. And our second TP would be more of a technical target. I'll draw my Fibonacci tool from the top of the move back to the start of the move, and we can see the 0.75 Fibonacci retracement level is just under this low here at 69,250. So that would be a full TP for me on this short. Now again, with this trade, no matter how confident I was, and I was extremely confident that we were going to lose this trend line this morning, with the help of Trump's tweet saying that the Strait of Hormuz is now open, and if Iran attempts to block them, that he's going to blow the shit out of them, basically. That the Navy are going to blow them out of the water. Now, we all know how much shit Trump is talking lately, so I don't know if you believe a word of it, but for once, he's helped me with the trade. And we are printing on this one. So again, it is risk-free. We came just short of TP1 here at 70,500 earlier, and I do think we will get our full target here soon. So again, I was extremely confident on this trade, but I'll never break my rules, so I'll never put more than 10% of my account value on any trade. The combination of all these 4 rules is what has allowed me to become extremely profitable over the last few years. Anytime I've lost a trade is anytime I've broken one of these rules. I can guarantee if you stay disciplined and stick to all 4 of these rules, you'll see a massive improvement in your trading. I hope you guys learned something from this video, and we'll see you guys soon.